There are three main reasons why I think Liqwid token will 10x in value, and the first is because it is unique in its kind, as there are no other projects that offers what this protocol does. We will shortly explain these and other reasons why we believe it will explode in value, so make sure to watch till the end to be able to make your own decision if it is worth investing or not. Liqwid Finance is an open-source algorithmic and non-custodial interest rate protocol built for lenders, borrowers, and developers. In a traditional bank, you can leave your funds for a determined period and earn yearly interests as low as 1%. Liqwid Finance works exactly like a bank, but it offers higher interests in a decentralized manner, and this is just the beginning. Project Catalyst is a series of experiments which seeks to generate the highest levels of community innovation. Catalyst is bringing on-chain governance to the Cardano blockchain by allowing the community to self-determine priorities for growth. Project Catalyst is divided into a series of funds which are deployed every 6 weeks. These funds will elicit ideas in the form of proposals from participants. This way, Liqwid Finance had the majority of the community voting to provide funds from the Cardano reserve to support the development. It is important to understand that Cardano blockchain has one of the biggest communities in crypto. This because it is one of the most capitalized cryptocurrency and always delivered the promised updates. Cardano's coin ADA itself went from 2 cents per coin to over $3, which is over 15 times its value, and all this before its major upgrade thanks to its powerful community. After many years of research and developments, only 1 year ago, they enabled smart contracts, and since that upgrade, many projects are being built, even if during a bear market. These projects are launching their own token, and they have the potential to be the next 10x or 100x gems in the ecosystem because there are thousands of investors ready to buy once we see a sign of the end of the bear market. Cardano's ecosystem did not have any 10x or 100x coins, but it will have exactly like we saw it happening on Ethereum. And this is another reason Liqwid has so much potential, considering that it is one of the best projects in the ecosystem. But why is it so unique? Liqwid Finance is an open-source algorithmic and non-custodial interest rate protocol built for lenders, borrowers, and developers. In a traditional bank, you can leave your funds for a determined period and earn yearly interests as low as 1%. Liqwid Finance works exactly like a bank, but it offers higher interests in a decentralized manner, and this is just the beginning. Blockchain technology allows Liqwid Finance, a decentralized finance protocol, to offer similar services without a third party and with much higher interests. Here, people will be able to lend, borrow, or leave money there and earn a percentage from the interests as rewards. Liqwid Finance offers low or zero interest for borrowers and leaves most of the interest rewards to lenders. This means that comparing it to a bank, it cuts all the expenses that a traditional bank has, for example, the employees, the physical rent, and other expenses. These money can now be used as rewards for lenders that decide to leave their funds. Another reason why Liqwid will likely explode in value is related to its foundation. Liqwid Finance was founded in 2020 by Dewey Cameron and Florian Völleri, and they started building it thanks to Cardano Catalyst funds. Project Catalyst is a series of experiments which seeks to generate the highest levels of community innovation. Catalyst is bringing on-chain governance to the Cardano blockchain by allowing the community to self-determine priorities for growth. Project Catalyst is divided into a series of funds which are deployed every 6 weeks. These funds will elicit ideas in the form of proposals from participants. This way, Liqwid Finance had the majority of the community voting to provide funds from the Cardano reserve to support the development. The Liqwid team is composed of traditional finance industry veterans, DeFi power users, and Haskell developers, and in the past months they announced many new developers onboardings. They have a very slow progress in Cardano style, and I think they will deliver an excellent product. The launch date has not officially announced, but one of the founders said that it is likely going live on the mainnet in December, as at the moment is on a testnet phase. The main features of the decentralized application are lending and borrowing as mentioned above. Here we can see how exactly you can earn rewards on the app if you deposit funds. When you provide any sort of liquidity to the platform, you get Q tokens. Example, you provide 10 ADA, you get 10 Q ADA, or if you provide 10 Liqwid tokens, you get 10 Q Liqwid tokens. First, you can basically earn Liqwid tokens if you stake these Q tokens. If you provide ADA, you will be entitled to get more rewards. You will be able to 6x your yields rewards, and they have 4 additional yield schemes which we are going to cover shortly. First, by staking ADA, you will get 4% more ADA yearly thanks to Cardano's staking rewards. Second, when you supply ADA, you will get Q ADA, which increases its value on an interest yield calculated yearly on the borrow interest. This phase is called a qualifier, and you can read in more details on the white paper. But this means that ADA depositors earn lender interest from ADA borrowers repaying their loan plus interest. Third phase, called the hydroponica. Here you can earn an extra reward if you stake these Q ADA that you get when you first deposit your ADA coins. The reward you earn is in Liqwid tokens daily. 47.5% of Liqwid token supply is allocated for the community distribution program that starts at mainnet launch. Fourth yield reward comes if you stake these earned Liqwid tokens into the Agora safety pool. Here you will earn a protocol dividend that comes from a small percentage of the total borrow interest repaid each epoch or 5 days. And you will get additional Liqwid tokens as part of the insurance pool's safety incentive. Fifth, you can stake this protocol dividend back into the Agora safety pool. Sixth yield reward comes from the liquidation interests in ADA coins on Liqwid tokens. These 6 yield streams were just for ADA holder, but there are 3 more incentives which is worth be aware of. First, users borrowing assets from the protocol earn 50% of the daily Liqwid tokens distributed to that market as part of the Community Incentives Program. This means that 50% of the daily distributed Liqwid tokens goes to users that borrow ADA coins and use the protocol. Second, with the borrowed assets, users can supply them in a decentralized exchange liquidity pool and get temporary liquidity provider tokens while earning the swap fees. Liquidity provider tokens can be swapped back for ADA at any time. Third, if eligible depending on which decentralized exchange you use, users can stake their liquidity provider tokens to earn the yield farming reward of the decentralized exchange. Lastly, the rewards earned from the yield farming on the decentralized exchange can be put to work on further staking pools, etc. Many users will try and use the platform because Cardano holders want a place to leave their funds and earn good rewards. And in my opinion, this will be the best platform if it will be fully functional as per their white paper. If we look into tokenomics, there are 21 million LQ tokens as maximum supply. At the moment, 365,000 tokens are in circulation. The single token value is at around $20, and it has just $8 million market capitalization, which is extremely low. There was no initial stake offering, no presale, no VC funding, just a fair launch. The only way to earn Liqwid tokens is by buying it, using the protocol or receiving grant funds from the decentralized autonomous organization's treasury, only from day 1 on launch day. LQ is a governance token as mentioned before, so holders will be able to vote on the future on the project. If you want to buy the token, you can trade it on decentralized exchanges like SundaySwap or MuesliSwap, as you can buy it on Hotbit centralized exchange where they have been listed on last April. In the last months, they have been also listed on CoinMarketCap and CoinGecko, which is an other good news, and it will increase visibility and exposure at launch. The supply will be slowly released over 2 to 3 years starting from launch day, and it is distributed this way. 25% will go to the team, 60% will be distributed to the community, 10% for yield farming, and 5% for the decentralized autonomous organization. Basically, 75% will be slowly distributed to the community who provides liquidity to the protocol, and 25% will slowly be released for the team, which is positive for price stability and growth. They announced a collaboration with Clarity DAO, an Agora governance module off-chain infrastructure on a mission to build the no-code infrastructure required to easily create, manage, and participate in DAO on the Cardano blockchain. Many new partnerships, one of the most important is with Cody Network, which has the role of maintaining JED. JED has been built by IOHK or Input-Output, the Cardano's team, and it is the first over-collateralized ADA-powered stablecoin protocol on Cardano, which recently launched their mainnet. Liqwid Finance will support JED as collateral type on the platform at launch. This will boost liquidity and will allow users to mint stablecoin loans. They have partnered with a DAO to work together with their developers and build Agora, an open-source governance module built not only for Liqwid Finance, but made available for any Cardano projects. Agora governance is on a testnet phase 2, and it will be synchronized at launch with the actual ADA coin weight. So who has more Cardano coin will have more vote power, exactly like Project Catalyst on Cardano. In the past months, they launched their NFT collection called Aqua Farmers, which have been a success so far, but I am not going to explain how this works as I did last time we reviewed Liqwid Finance on this channel. They then collaborated with OptimFi and few other projects to leverage Liqwid Finance platform and the Agora module integration partnerships, which will increase the exposure, and it will bring many more investors on board. Looking into the roadmap, they had a private testnet in Q3 2021. It is now over a year that they are improving it and giving weekly development updates, as well as they did release some demo videos of how the app will work. At the end of March, they announced that in April a public testnet will launch. However, this has yet to come as they kept it private, which is disappointing for the community. They were supposed to launch the mainnet in Q2 2022, so by June, but they delayed it, and if by December they will not launch the mainnet as promised, I think they will let down a part of the community. When they will launch in the coming weeks or months, however, I believe they will have huge adoption of the platform, as it is one of the most supported projects on Cardano. ADA coin and Liqwid tokens demand will increase, which will exponentially drive the price higher for both tokens in the coming months. But of course, it depends on how Bitcoin will perform first of all. If we compare it to Luna and Anchor protocol, Anchor was offering high-yield rewards with their stable coin, which was collateralized by the Luna token only. Liqwid is built on Cardano. Different yields are already offered by the Cardano Strong ecosystem, and they will definitely going to be sustainable in the future. Additionally, Liqwid 2 will function with their stablecoin JED. The reassuring difference is that JED is over-collateralized, making the protocol much more secure and stable with mechanisms that prevent the collapse as we saw it happening with Luna. But if you want to deep dive into these differences and on how the Cardano's first stablecoin works, you should watch this video.